Be honest, how many times have you blown a profile challenge? One, two, or let's just say our trading account is starting to look like a graveyard of broken dreams. Well, we are not alone in this business. Over 90% traders fail profile challenges. Not because they are bad traders, but because either they use the wrong approach or they have complicated strategy. But simplicity is the best. So today I'm going to expose a simple strategy that can give you a high chance of passing profile challenges. It is very easy. You don't need to be a professional trader to use this simple strategy. So without further ado, let's jump in. If you go to my channel, you will see that all my contents are created to foster your growth in this forex trading. So don't hesitate to click that subscribe button, turn on the notification bell, and like this video so you can get notified whenever we drop a life-changing video like this. So without further ado, let's jump in. Before we go to the charts, we need to understand what is demand and supply and what is quartz model. Demand and supply are small areas of consolidation before a big momentum, whether a bullish momentum or a bearish momentum. So that small consolidation is what we call demand if it is bullish momentum, or supply if it is bearish momentum. But for quartz model, I've explained what is quartz model pattern several times on this channel, but I'm still going to explain it again. So what is quartz model pattern? Quartz model pattern is like SMC strategy, but some people say it is XMC advanced strategy. Whatever it is, I'm going to show you what is quartz model pattern. So after I show you what is quartz model pattern, then we do analysis to see how you can pass every problem challenge with this simple strategy. And it is simple. Before we jump to the chart, let me just explain the theory. First, you make sure you are trading with the trend, then mark your supply or demand, then you go to the lower time frame. For instance, if the market is bullish, then mark out your demand zone. When the market comes to that demand zone, then go down to 15 minutes time frame to look for quartz model pattern. This strategy can give you a high probability setup. Most times you can catch 1:6, 1:4, 1:5 risk to reward by trade using this simple strategy. Without further ado, let's jump into the charts. But don't forget, at the end of this video, I will also share some tips that can help you foster your growth in forex trading. Now, you know what is demand and supply. For you to trade this strategy very well, you also need to understand what is quartz model pattern, though it is SMC strategy, but I just love to call it quartz model pattern because it looks like pattern. You understand? So here we have a bullish quartz model pattern and another bullish quartz model pattern. Just make sure you observe the difference, though they don't look alike, but both of them are quartz model pattern for buys. And here is a quartz model pattern for sell, and here is a quartz model pattern for sell as well. Before you click away, please make sure you understand the theory behind this quartz models pattern. Okay, so when you have a sweep and you have a break of structure, another break of structure, so these rectangles here are the POI. That should be your entry. But what validated this POI is the liquidity that is near it. So some people who entered this trade too early will be taken out before the real move occurs. But remember, we are not trading this random from every zone. We are trading it from the main zone, and we are also following the trend. This is a high probability setup, but only a handful of traders will understand that trading is a lucky game. No strategy and no magic can give you 100% win rate. Though some mentors, some people out there claim that they have 100% win rate. But the truth is, some of them are saying so that they can sell their courses or to gain influence. This strategy I'm exposing in this video is a high probability setup. But just like every other strategy, it may disappoint sometimes. That's why you need to apply risk management in anything you are doing, in any strategy you are using. Okay, from my experience, this strategy can give you 80, 70, 60% win rates if you do it the right way. Now we are going to jump to the charts to see the chart example how you can trade this strategy. So here is a good supply zone from Euro USD 4 hours time frame. You may ask me, why did I say that this is a supply zone? A supply zone is a small consolidation before a massive bearish drop, and that bearish drop must break structure. Okay, so if you look at this place, you see a break of structure, and before this break of structure, we have this bearish candle that's half momentum. It is a very big bearish candle.
And as you can see, this high did not touch this supply zone. So some people will call it inducements. That is true, it is inducements. And that makes this supply zone valid. Apart from that, we are still going to look for confirmation. So for me, that makes this trade a high probability setup. So we have confirmed that we have a supply zone here because of this strong bearish drop that broke structure. Now for us to trade this, we are going to go to 15 minutes or 30 minutes time frame to look for confirmation here. So let's see how we could have got this drop and make money. Okay, so here is our 30 minutes time frame, and now we are going to zoom to this supply zone to look for confirmation, that is for Quasimodo pattern. Remember, most times the price can just hit the supply or demand zone or your point of interest and go up or go down without even giving you confirmation. So if you want to be trading with confirmation, just be ready to miss a lot of trades. But one thing about trading with confirmations is that you will get a high probability setups that can give you a big risk to reward. If you look at this, you will see that this is a Quasimodo pattern for sale. If you go back to that illustration I showed you, you will see that this is the second Quasimodo pattern there. Okay, so now where is our sweep? This is our sweep. Where's our break of structure? This is our break of structure. Before this break of structure, we have a high that didn't touch the main high. That is this. So that means this is our inducement, this is our sweep, and this is our break of structure. Since we have sweep, we have our break of structure, and we have inducement. That means we have a Quasimodo pattern as confirmation. So your entry should be anytime the market sweeps as inducement. Some people can say, okay, let me wait for the market to come around the center of my POI before I sell, before I buy. If you do that, you may miss the trade because the market doesn't care about your entry. What the market wants is liquidity. So your entry should be immediately the market takes out this inducement. The stop loss should be above the high, that is the sweep. Okay, and the target at least 1:3, 1:4, 1:5. This trade is 1:5. Okay, as you can see, since then the market was still pulling down with momentum. Okay, how can you pass your profit with this strategy? Imagine if you take 6 trades, if you lose 3 trades and win 3 trades, that is 50% win rates, and this strategy can give you more than that 50% win rates. That's 50% win rates with these 5 risks to reward per trade. You are already passing your profit. Okay, so that's it for now. Make sure you click that subscribe button, turn on the notification bell. If you have any question, you drop it in the comment box, and join our trading community for more tips like this. Thank you for watching. If you have any question, don't hesitate to drop it in the comment box. And also, don't forget to click that subscribe button and join our trading community using the link in the description of this video. Goodbye.